Hi all, I'm Jeff Hewlett. I'm a decision confidence builder. I'm the author of the book, Making Choices, Making Money. Last week, we discussed the savings waterfall. This is the approach we use to make sure our income finds its way to your wealth building. Today, we're going to discuss expenses and potential obstacles keeping your income from finding it to those long-term investments. We're going to discuss how to manage the sludge in your life. Be careful to manage your fixed expense payments to a reasonable percentage of your income. The 50 to 60% range is a good rule of thumb. In the savings waterfall graphic, this is the first horizontal bar at the top. When realistically possible, it is better to have a larger blue savings eligible portion. One of your biggest expenses is housing. The good news is housing provides marginal utility, and if you are a homeowner, generally goes up in value, a win-win. Marginal utility means the housing's use as shelter or other needs in your future is valuable to you. However, sometimes people may get themselves into fixed payments that provide less or no utility in the future. There are two kinds of fixed payments types that may be troublesome: contractual-based payments and sludge payments. First, let's discuss contractual. These are payments made to a lender or a lessor, like a credit card, lease finance company, or a mortgage company. You sign a contract with a certain frequency of payments, either fixed or variable. The crux is one does not have a choice but to make payments while there is still a debt. It is critical to make sure the marginal utility of that being financed is worth it. If you are spreading your payments over several years, then your marginal utility should match the same time period. Imagine the thing you're buying. Then imagine that same thing several years in the future. Will it provide as much value in the future as it does today? Be honest. In truth, this is a very challenging question. People naturally struggle with uncertainty. We have cognitive biases that sometimes make accurate future forecasts truly challenging. To help overcome the uncertainty challenge, my rule of thumb is to only finance assets that appreciate in the future, like a house. Try to avoid using credit for assets that decline in value, like furniture or a car. Now, let's discuss buying a car as an example of buying something that reduces in value. I get it. Sometimes you need to buy something that declines in asset value, but may have constant marginal utility. A car is a great example. Perhaps you need transportation to work. A car likely maintains a constant marginal utility because of the ongoing need to work or otherwise help us manage our lives. However, we need to recognize that most cars depreciate in asset value over time. In this case, I suggest minimizing your exposure to the declining asset value while fulfilling the marginal utility of work transportation. In other words, buy as inexpensive a car as possible that still provides safe transportation. Also, consider a car transportation substitute like rideshare or public transport. To be clear, this suggestion considers a utility bundle that only values the safe transportation preference. You may have additional preferences to weigh. You may wish for a big car, a fast car, an electric car, a purple car, or many other preferences. Additional preferences will almost certainly add cost. The key is to evaluate those preferences in the context of the wealth building approach we discussed earlier. Next, we're going to discuss the other fixed payment type called sludge payments. Sludge is a super funny word, usually associated with mud or slurry from an industrial process. In the case of behavioral economics, it has a very different meaning. Sludge is what we call anything in a process that hinders people. It prevents people from doing the thing that they want to do and eventually reduces the consumer's welfare. This means you enter into a payment arrangement to receive some product or service, but over time the value to you goes down. Sludge is when you continue to make those payments even though the value to you is less. A prototype for sludge is that many consumer products and services companies target customers for automatic payments. Think of your favorite entertainment streaming service like Netflix. Most streaming service providers offer incentives to sign up for automatic payments. The company's marketing team knows that this is very sticky and people are much less likely to cancel these payments because they lack salience. These payments, what we call sludge payments, are minimally noticeable. Sludge payments are a boil the frog marketing approach pursued by many consumer products and services companies. Sludge payments become like fixed payments because they are likely to be forgotten. Often, the marginal utility of the underlying sludge payment's purpose may decline or become useless, even though people still pay it. Based on the sludge definition, this is the reduced consumer's welfare result. Check out the website. We provide sludge examples called Sludge in Action. Here is a sludge challenge for you. Check your credit card and bank statements. How many auto transfer transactions do you see? These are usually the ones with the 1-800 number. Do they have the same value today as when you signed up for the service? This is sludge payments in action. The point is, whether contractual based or sludge payments, people sometimes get themselves into trouble by overcommitting to inflexible fixed expenditures. Finally, a great way to manage your sludge and other expenses is with a budget. There are many budgeting tools. Please see the website for some suggestions. Consider using a simple budgeting model. Your budgeting tool should be something you can keep up with and makes sense to you. Also, consider making your own budget spreadsheet in Excel or Google Sheets. Like a geek like me, this is a great way to learn spreadsheet mechanics and create more personal investment in your budget because you worked for it. You may use the commercial budgeting tools as a template to build your own budget. Check out our website for suggested budgeting tools. Managing your financial life starts with the savings waterfall and managing your expenses. The idea is that you want as much as possible, as much money to flow to the bottom of your waterfall. Then it will be available for long-term investment. Next time, we'll be discussing our investment approach called the barbell investment strategy. Until then, you've got this.